Morning, everybody. 8:10 a.m. May 23rd. Welcome to my channel. This market never ceases to amaze. Okay, we were consolidating in this huge range, basing out, and it was just a matter of something happening, right? Now, I kept talking this week about how my breadth indicators are pretty much very frothy. The bullish percent index, the percentage of stocks over the 20-day simple moving average. And I said, so far we had a bond market take down our market, right? And now we had Trump talking about the EU has not been easy to deal with, and he's going to impose some tariffs, which is taking the markets lower this morning. Okay. Now it just so happens to be May, and seasonality was like not seeming to come into play too much, right? Well, now we are underneath May's anchor VWAP. That means sellers are in control of the month. Okay? That means whoever bought in May is now underwater. We are also into the unfilled gap. Okay? In the futures market, not in the NASDAQ right now, but in the ES, we're into the unfilled gap right now. Okay? We're also at a previous, let me just look at this chart. I could push this up to show you guys real quick. Let me just see here. Okay. Where are we at, right? Let's just look at the hourly charts before I start anything. I just want to show you guys what I'm looking at. This is the ES, okay? So this is your month to day VWAP right there. We are underneath that now. Okay, that was about 5804. We are there. Okay, this yellow, okay, anchored VWAP is the anchored VWAP for this year. We are now underneath the anchored VWAP for this year. Okay, big. That's so annoying with that anchored VWAP. All right, so this right here is last month's highs. We are now underneath last month's highs. Big level to pay attention today is 57.16. That happens to be the most traded price of the rolling year. Okay, this gap is huge. This is the gap from the U.S. trade China deal. Okay, we're getting ready to erase that. So all of this could be erased. And look at the market. It's just moving down, right? Destination today could be 57.16, 57.17, the most traded price of the rolling year. Okay. So May is reeling its head again. And generally with seasonality, you bottom out in June. So hold on. Going into a 3-day weekend, this is pretty nuts. Okay. So that's what we have going on today. So the market's pretty crazy. We're at a 25 VIX now. Okay. We're at a 25 VIX. Apple also, Trump was talking about Apple iPhones in India. There's also, Apple's down almost almost 4%. Okay, almost 4%. So, what a market. What a market. All right. Now, without further ado, welcome to my channel. My name is Steven Gonzalez. I use market profile and volume profile to find structure in the markets, along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. All helps me find structure. Okay. Also, anchor VWAPs, as I just showed you, and my market internals, which will show me once the market opens what the market is capable of. Okay. Every morning I do this. All right. Hopefully you can join me and then give you the market story, why the market's moving, the leaders and the laggards, all that jazz, daily charts, and I give you long and short trade scenarios down the road. Okay. Now, why don't we get right into futures? Because this market's nuts. It is moving down. All right. Here we are. And let's look at this market here. Now the VIX is up 25.59%. It's up 5.19. We're at a 25.47 VIX. So the fear is back. Okay? The fear is back. Now, let's see what we have going on here. Okay? So gold is a safe haven, and that's getting flooded right now. 1.68%. It's up. 30-year bonds are being bought. Okay? So, remember yields went up, right? Yields went up the other day. And I said that's not usually a good sign, right? Well, bonds are being bought. Got a nice yield. Bonds are being bought. Now, usually bonds be bought as a safe haven, risk off, right? Look at the dollar. Dollar's moving lower. Crude down 1.36. Dow down 1.45. ES down 1.53. 10-year yield. 10-year yield is down 1.89%. Nasdaq's down 1.90%. Russell's down 2.44%. Okay, Bitcoin down 3.38%. Ethereum down 4.47. Moving on to the Mag 7. All right, Mag 7. Here we got Eli Lilly, which remember, healthcare stocks usually don't take a big brunt. All right, on a big sell-offs, on a big crash or a recession, everything goes down. But right now, Eli Lilly holding up. Now let's go to the one percenters, which is almost the whole list. Microsoft down 1.18, GE down 1.42, Tesla down 1.38, JP Morgan down 1.72, Google's down 1.53, Boeing down 1.84, Meta's down 1.93, AMD down 2.18, Broadcom down 2.27, Nvidia down 2.50, Amazon down 2.76, Apple's down 3.32, and Coinbase down 3.70. Okay. Moving on to the sectors. Okay. The leader this morning is utilities. Okay, utilities. All right. So yields are going to go lower. The 10-year yield is down, like I said, almost 2%, close to 2%. All right. People are going to flock. If that continues to go down, they're going to go back into utility stocks, which have some good dividends. All right. Followed by staples is flat. The rest is down. Let's go to the one percenters. Industrials down 1.01%. Financials down 1.37%. Discretionary down 1.78%. Technology down 1.91%, the largest market cap weight. And there's your risk off indicator. Semiconductors down 2.55%. That is the laggard. That is the laggard. Okay? We're in the middle of that unfilled gap I was just showing you. All right? In the middle of that unfilled gap. Now, let's get into that news. All right. In the economic calendar. Leave it to the day before the 3-day weekend, right? Unbelievable. All right, today we have new home sales. That's really it. Fed Cook speaking at 12. That's all we got today. That's all we got today. All right, now, the headlines right here. That's 7/19. Trump threatened tariffs on Apple. Okay. At 7:43. Trump, the EU has been very difficult to deal with, recommending a 50% tariff on the European Union. Then we sold off. Okay. Trump at 7:45. Trump EU. Trump EU tariff to start June 1st. 7:45. Trump talks with the EU are going nowhere. Hence, we got this sell off. Okay. It's pretty cool that the juice does this. Look at that. It's like market moving and they put it in red. Look at that. There's where it happened. Boom. That's the S&P. All right. Pretty nuts. Pretty crazy. This is our market. All right. Now, other stuff here. Apple stocks fall after Trump threatens 20% tariff, 25% tariff. Okay. So it says Apple shares tumble following President's threat to impose a 25% tariff on companies' products if they are not manufactured in the United States. The announcement also affected NASDAQ futures. All right. So the president expressing his demands on True Social, insisting that iPhones sold in the U.S. should be made domestically rather than abroad. I have long ago informed Tim Cook of Apple that I expect their iPhones that they would be sold in the United States of America, will be manufactured and built in the United States, not India or any place else. If that is not the case, a tariff of at least 25% must be paid by Apple to the U.S. Thank you for your attention to this matter. Boom. Okay. Now, Apple was trying to avoid the tariffs from China and moving it over to India. But just the other day, I heard Trump say, well, I mean, it's okay, but he wants to make them in here. How much will an iPhone be if it's made here? Probably a lot more. All right. So that's what's going on there. All right. Now, this news is before that news came out. Let's see. Nuclear stocks surge on report of Trump executive orders to boost industry. All right. Musk's Doge expanding his Grok AI in U.S. government, raising conflict concerns. Let's see. Some U.S. banks explore venturing into crypto with joint stablecoin. All right. So a lot of this stuff doesn't really matter as much now, just because of like what the the news that's hitting right now. Okay. So I'm gonna just move on. All right. We just talked about the juice. We just talked about that. All right. We hit you with the juice. All right. Now let's go over the daily charts. Now yesterday happened to be unchanged. We had a nice move up. We had a nice move up. And then we had a doji candle. Okay. And what happened? We closed right where the day before closed. So it was pretty much a nothing burger day. And I talked about that. A lot of times when you have this big move, the market needs to digest it. Okay. The market needs to digest the move. And that's what happened yesterday. Now, this means nothing in the grand scheme of things now. Okay. Now, this trend line was broken. Okay. But we have this primary trend. Where are we at? Okay. Here's what's crazy right now. Let's look at these levels together. The 200-day moving average, the 100-day moving average is right at the same. Call it 575.50. 575.50. Here's your trend. Here's your primary trend line. The market right now is below the 200-day and the 100-day moving average. Okay. Remember how we got above it? We didn't even get above it in regular market hours. It was overnight. This was the U.S. trade China deal. We gapped up into this big gap here, right? Market right now is 574, let's call it. We're right here, below it. Pretty crazy, right? All times these big moves are happening overnight. We're below the 200 and the 100-day moving average, about to hit the 20-day moving average. We are right below this trend line. Right below this trend line. Okay? Let's look at futures. And we could see what is going on right now. So here we go. Here's futures. That's last week's highs. Notice the resistance. Then you had the bond market auction. Took down the market, right? Then you had yesterday. Okay. Now look. EU tariff. And I just told you before, right? Right to last month's highs. Futures down to the 20-day moving average. And here's last week's lows. We're not at quite of last week's lows, but about to take back this China trade deal. Okay. Look at this level here. We're going to pay attention to that level today. Okay, because look, it's the week ago's highs. It's last week's lows. You had another weekly level here. This is a huge level, 57.34. Write it down for futures, 57.34. Big level. Okay, a lot of resistance here, support. Look across, and you have this consolidation here as well. Big level. Remember, 57.17 is the most traded price of the rolling year, which is right here. Okay. It would really take a big sell-off to cut through that, being honest with you. Okay. Let's look at the Qs. Qs broke this trend line. I'm going to get rid of that. Okay. They had a boring bullish structure. They didn't really fall that much. Hit the 90 EMA daily. Okay. And you can see we closed a tiny bit higher than the previous day. All right. Tried to move up. Got about 50% of the previous day. And then at the end of the day, it pretty much sold off. Okay. Now where are we at? 504. Wow. $10 down. We're all the way here. 504. Let's just call it 504.20. Okay. Here's last week's lows. Where is that? At 50, what is that? 501.48. That's last week's lows in the Qs. Last week's lows in the Qs. Okay, is 501. We're at 504.40, about right here. Okay, here's that gap from the U.S. trade China deal. So the Nasdaq is still way above the 100-day, 200-day. SPY is not. It's below it. That can make for difficult trading. Okay, that could make for really difficult trading today. Let's look at futures. Here we are. So the futures, you can see this resistance here. Look at that. 1, 2, 3, 4, 5 times it tried to break this level. Couldn't do it. Right? Then the bond market auction, Trump EU tariffs now taking down the market. Okay. Here's the 100-day and the 20-day simple moving average is around 205.83. Here's that other big level. Here's the next big level in the Nasdaq. Look at all this confluence here with these weekly levels. So weekly high, weekly low. That level is around 203.80, 203.80 to 203.30. Okay, where does it go about this consolidation right here? Okay, that's where I think the market could push down to. That's far. Eventually. Okay, remember, seasonality, I was talking about it. You never know when it's going to strike. Right? It's always like, oh my God, this is like a bullish May. Boom. Okay. This is what we're working with right now. Okay, let's move over to the bond market. That bond market saw a spike the other day. Okay, that saw a spike. Now, is it going to now act like the regular bond market, where when there's fear, people buy bonds? We'll see. Okay, let's look at the 10-year yield and just talk about this triple-headed monster here. All right, so yields still pesky here, but look, went right up to this resistance. Now we pushed lower. We're getting some buying. I'm sorry. This is yield, so the inverse of bonds. Okay. So this means people are buying bonds, which causes yields to go lower. Okay. So right here, it's still playing with this 2025 anchored VWAP right here. Okay, so we have to see. It's still in an uptrend. This is the yields, remember, not bonds. It's the inverse. All right, it's the inverse. People are buying bonds, which makes yields go lower. Okay, there is a trend line here. Let's see. All right, move on to the dollar. Now the dollar had some weakness, and it's hanging out down here, right? Right here. There's that dollar. Let's look at the VIX, because that VIX is showing fear again. Look at that pop in the VIX. You were in this range. Okay, let's just look at it like this. You were in this range, all right? And then boom, we're back into the 24 VIX. Okay, look at this consolidation here. Let's see, we hit the 50-day moving average. Fear is back. Fear is back. All right, now, I already went over this, but I'm going to go over it briefly again. The 1 hour charts in the ES futures, I think is really important to look at. All right, so give me a sec, because there's a bunch of levels I got to take off. All right, let's look at this together here. There's your 1 hour charts in the ES. We'll go over to NASDAQ as well. Now, I already explained earlier, but I'll do it again. All right. Here's this high, right? Market seems so good that day. And then we got the bond market right there. Boom. We tried to make a little rally yesterday. And then you got Trump EU tariff. Okay, so this demand zone has been blown through. Oh, this is so annoying. I think it's anchored VWAP. I have this on. Okay, so let's look at this. So I'm going to take off this demand that has been blown through. This large high volume node right here, that in a normal market would have held that market. Now we're past that. Okay, right there is the anchored VWAP for May. We are now, sellers are back in control. All buyers are underwater for the month. Okay, this right here, look at that. Look at that tick of that candle. That's the anchored VWAP of this year. Of this year. Okay, you're pretty much in the middle, right at the anchored VWAP for this year. Very powerful. Okay, there's last month's highs. That's where we're getting right now. We're at last month's highs. Okay, now you can see we have a demand zone right here. We got buying in, right? Here is a major level, like I was saying earlier. Okay, you have the most traded price of the rolling year at 57.17. 57.17. Okay, if the market goes down, I believe it will go down to here. If you break that, that is whoa, 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 whoa. Wow. Let's say we break that and bottom in June somewhere. Wow. Okay. So this is a very big demand zone here. This is right here is where the U.S. China trade deal on a Sunday open ripped. Okay, that's where that started. Now, huge unfilled gap. This blue box. We are now into this unfilled gap. Okay, can we take this all out? Oof, I don't know. Okay, so those are all your levels here. Let's look at the NASDAQ. Let's look at that NASDAQ together. All right, so the NASDAQ you're going to notice is really different. Structurally, it's in a better spot than the ES. Okay, now, just for comparison, if we're talking about the month-to-date VWAP, I'm sorry, year-to-date, this is your 2025 anchor VWAP. Way above it still. Here is your month anchored VWAP, still above it. Okay, still above it. The U.S. China trade deal gap starts here. See how much stronger the NASDAQ is in structure compared to the SPY or the ES. A big difference. A big difference. So let's get rid of, I got some demands here. I'm going to get rid of them here. This demand's gone. Now we're in this demand zone right here. We're bouncing out, okay? And this level is very key. We almost hit the anchor VWAP for the month. And this level is the most traded price of the rolling year, 206.84. This area has been the most trades of the rolling year. We're bouncing out of there. Okay. Let me get rid of this little descending wedge here. So what do we do from here? Obviously, the NASDAQ's in much better shape than the ES. Okay, much better shape. We didn't take out the month-to-date VWAP. We're not even challenging the 2025 anchor VWAP. We held a major level. Okay, so if anything, right now, bias wise, I would be looking long NASDAQ. Okay, now don't get me wrong, I could change my intraday trading to short, but right now, if I wanted to get long, I'm going to pick the NASDAQ. It's just structurally stronger. Okay, structurally stronger. I mean, the gap is not, it's not even near the gap, and the ES is inside the gap. Crazy. All right, that's just good perspective to look at. All right, you need to do this in your analysis. I mean, look at that. Inside the gap in the ES and not even buy it in the NASDAQ. Okay? That is your hourly futures charts. I'm hoping everybody gets to really see the analysis there using the anchor VWAPs and the most traded prices. Okay? We're going to move on now and look at our markets together. We can recap yesterday. Not sure who's with me, but let's do it. All right. Here's your ES. Now remember, I went over a bunch of levels. Okay? You're going to see the same types of levels, same boxes. Let's look at our profile. Look at that excess now. Woo! All right. Now we did have this right here. This was a high volume node starting, and it was about to move this most traded price here, which would be the bearish. Okay. Then you got Trump. So remember, news catalysts just trump everything. No pun intended. All right. Here's your month to date VWAP. We're underneath it. Here's your unfilled gap. This is how big this gap is. Okay. Price is here. Price is here. Pretty crazy. We might get rid of that whole move. Okay. That's your unfilled gap. All right. Now, anytime you get a big gap down like this, you got to mark off the 50% retracement of this gap. 58.1450 is your 50% retracement. Kind of lines up with the month to date VWAP. Okay. Now the most traded price of the overnight is 58.59, and we haven't moved that down yet. I'm assuming it will probably move down. Okay. We do have the single prints here. You can see the very thin volume. The very thin volume here. Okay. So these are emotional selling right here. Okay. So we can see that clearly in the profile here. You have single prints. Okay. Now remember, like I said earlier, the market are going to be tough to trade today. Okay. Remember, SPY underneath 100-day and 200-day moving average, NASDAQ above. So I'm really going to be taking the information, the data all in today. Okay. So we're into an unfilled gap underneath the month-to-date VWAP. Okay. And we have our 57.17 level here, which is the most traded price of the rolling year. That is probably the floor. If it's not, it's very bad. Okay. So if we're around this area, I am not going to look to short anything unless I get confirmation or some kind of acceptance below it. Now remember, we have our unfilled gap. Let me change the color here to yellow. Okay. Or maybe just the blue that I have here. All right. So we have my blue block boxes are gaps. So this is that unfilled gap that we're inside right now. This is from the U.S. trying to trade deal. Okay. So we're about to try to take back this move. Okay. Then we have our most traded price of the year down here. That's your 57.17. And that is your VPOC. Actually, let me get rid of that. This is your most traded price. which is a VPOC, volume point of control, 57.17. Okay, that is your bull bear line for right now. Write that down. 57.17 futures, your bull bear line for right now. That is your gauge to see how weak this market is. Okay, we are in a demand zone right here. We're getting bought up in this demand right there. Okay, 50% line. Okay, I'm going to line this up in this area to conclude gap fill around 58.42 right here. Okay, this is what I'm going to be looking at. All right, now there's going to be a lot of crazy action, I'm assuming, right off the bat, and I just got to wait for the noise to settle out unless there's some golden opportunity. All right, what's up, Chief? I'm not sure if you're watching or listening. All right, so let's get into scenarios here. I'm going to start with a bull play here. Okay, we're holding these lows, all right, inside, and we bounce out of this demand. So what I'm going to be looking at today is when we open. Now, very important for everyone to understand. When I look at market internals, right? When I look at market internals, just to show you again. Hold on a second. Let me so I can put them up here. When I look at my market internals, right? This all is based on what the market does off the open. I don't care about yesterday's close. So when the market opens, everyone else is going to see red. I'm going to see actually what is strong off the open. That's the difference. Okay? I don't care about yesterday's close. I want to see what's strong off the open. So when I see that here, okay, that's going to tell me, is a long make sense? Remember, like I said, if you're looking at yesterday's close and the percentage of how far they're down, you're not going to really in your brain go, oh my God, look what's leading right now. That's what the market internals are there for. Okay, so that being said, I'm not even sure if I did this or not. I think I did. I'm going to do it anyway again. Okay. Let's move this most traded price down. I think that's going to happen. Okay. If that happens, all right, I want to see a push lower that breaks the overnight lows. And maybe you get a little break, right? And what I'd like to see is some type of recovery back into the overnight range, higher low, and then try to start ripping up, and you see if you can clean some of these single prints. Okay, now I'm not saying this whole move happens, because even if you got long here and just got to here, it's a nice trade. Okay, now number two, you can get a deeper pullback. Okay, come all the way down, break. This is a previous weekly high, a low. Okay, 57.34. Let's say you do this, boop, and you go into that area that I said. And let's just say the market is not super weak. Okay, remember, off the open, not super weak. I'm going to look to go long in here. And there could be games played in here. So let's say if it just does this, fills the gap. The gap fills also in here. And then you get one of these. Whoop. I'm going to look to play long there. Now, the market has to come down there quick, okay, for me to be interested in that. Now, the most traded price hasn't moved down here yet, but it most likely will. Okay. The other play that I would say is, let's say this becomes the most traded price. I would look for a push up and hold that, and then try to get a move up. Like I said, this is not going to be easy to trade. I'm not going to sit here and say, oh, this is just like easy, like taking candy from a baby. It's not. Okay. Let's go to this bear side. Okay. We have our gap fill all the way up here. That is far away. Very far. Okay. Very far. And there's not even, you can see, like I said, volume's starting to build out here. Okay. You can see a couple high volume nodes here. You can see a little divot here. That would be a supply and demand. Let me open this up because I haven't done that. Let's open this up like this. Okay. All right. This is our price action from the overnight. All right. So short, right? Short. So we're inside the gap. So what I would look for is, here's your gap, the top of that gap, and your month-to-date VWAP are together here. And you got your 50% retracement of the overnight, right? What I would look for is some type of failure in here. Boom, boom, higher low, lower highs, and then you can start to go and try to go and tack that overnight low at about 57, 56. If you take that out, I do believe you probably test the 57.17. Okay. Now, markets could open up. Okay. Markets could open up. And let's say they open around here. And let's say they do this, right? And they just start holding here, holding here, and holding here, and holding here. Yeah, then that can move down. Okay. I'd like to get a pop up, but you don't know what's going to happen. Okay. That's about it. I'm going to be very cautious and really look at, like I said, the internals. I'm going to really lean on them. Okay. Now, I'll probably have a clearer plan when the market opens. All right. Moving on to NASDAQ, and we'll wrap it up here. Remember, NASDAQ is structurally stronger than the ES. Okay? It is structurally stronger. It's not even past the month-to-date VWAP, not even past the most traded price of the year, which is right here, which is giving support, like I showed you guys earlier. Okay? Let's mark off some levels here. First, we'll mark off that unfilled gap, just to give you what the difference is. This is the unfilled gap in the NASDAQ from the U.S. China trade deal. Lines right up with the month-to-date VWAP for May. Price is not in that gap. Now, what else do we have here? We have the most traded price of the rolling year. That is your bull bear line for the NASDAQ. That price is 207, let's call it. 207. Okay. It came into this region and bounced. Also, it's a big demand zone as well. Okay. Remember, the NASDAQ is structurally stronger. Here is your the 50% retracement of this overnight move is 209.82 right here. All right, and I'm going to go right to the breakdown here. Put a level here. Okay, 50% retracement right here. You got single prints from this overnight move. Okay, single prints again right here. This is what the playground is. Okay, so being honest with you, if I'm going to look to go long, it's probably going to be the NASDAQ, QQQ. Okay, structurally stronger. Big level here. Month-to-date VWAP, most traded price of the rolling year. You're in demand. You're not even at the gap. All right, gap is at 207 as well. That's the start of the gap. Under this level is no good. Okay. But this should be a defense for this market. You probably get a bounce. Is it a soaring bullish bounce where you just go way back? I don't know. I don't know the answer to that. All right. All right. Let's get into scenarios here. And we're going to start, okay, with bull side because, like I said, it depends what the internals tell me. If tech is leading, right, I'm going to sit there and be patient and try to find an entry to get long. Okay, so you can see the most traded price is probably going to end up down here. This level is so big that I do not trust a short here. So what I would want to see, pull down, pull back, not a pull back, go down, break the overnight lows, test 206.84, that's the month to date VWAP, happens to be the top of the gap. Remember, this is the most traded price of the rolling year. Okay, I want to see what we do in here. Remember, things aren't perfect. It could go like this, bounce, higher low, and start to really start cooking into these single prints. Okay, I don't know how high this can go. Okay, but this is what I'll be looking for. That's why I like the QQQ long, the NASDAQ long. Okay, remember, I only like it if the internals are not super weak. And remember, this could be a temporary bounce. I don't know. Okay, but I really like this because this level is going to tell me what do I do, right? I only want it quickly in and out for me to be like, yeah, okay. If it hangs out there too long, that's not good. I'm being honest with you. That's probably the thing I'm interested in. Now, if there's a most traded price of the overnight and it moves, that happens to be here because that is a high volume node right now. What could also happen is you push down, come through that, hold it, then you can go long as well. Okay, because right now we know these are shorts right here. Okay, now short side. Okay, short side. This one is gonna have to be not here. That is a, to me, that's a trap. Okay, if you don't know this level, it's a trap. Okay, so what I'm gonna look for is we do have a patch of single prints right there, and pretty much all here singles. Okay, anytime single prints become resistant, that's bearish. Okay, so what I'm gonna look for, push down, push up into this single prints. Okay, now it thinks that the 50% retracement is all the way up here, but if you just get any failure in here and boop, lower highs, right? Well, that's gonna get me happy to be short if the market's showing me it's weak. Take out this overnight low, and I think I'm gonna take it off here and maybe hold a runner, but I don't believe we break through there. Not on the first shot. If we do, wow, you can go down and fill the gap. But this level is a monster level. Okay, that's the only thing I'm interested in. I'm gonna be honest with you on a short because I need longs to be involved for me to short into, not down here, not at these month to day VWAP, the most traded price to the rolling year. I'm not interested in that. Okay, so that's it. Now give you perspective. Let's give you two perspectives, and I'll leave you with this. All right, let's look at this chart. This is my express chart buying profiles. All right, just to give you an example here, different way to look at it. Here's price, right? Here's that most traded price, 57.17, right there. You see it? That's your ultimate defense for the ES. You did pass this high volume node, like I said. Okay, so that's your bull bear line, 57.17. How much trading has happened there? Okay, there's your month to date VWAP. We are underneath it, right? So this is another way to look at the D levels. Just giving you different ways I like to look at things. Okay, now here's the NASDAQ. And you're going to see that most traded price that I'm talking about. And like I said, it's just a different way to look at it. Okay? And just pay attention. Look at that trading. Look how much trades has happened in this area. See the yellow line? That's that's the 207.34 where we just hit, and there's your month to date VWAP right there. See what I'm saying? The market has a lot to go through here. If it rips through that, then boy, it could get weak. Okay? Third perspective on that is just daily charts. Okay? Just another way to look at it. There's that 56.17 right here, most traded price of the rolling year. Okay? And then finally, we got our NASDAQ daily chart. And there's that price. Okay? There's that most traded price of the rolling year. We hit it and we bounced. You go underneath it, gets ugly. Okay? I'm going to leave you with that. All right, I'm going to leave you with that. Let's see what crude's doing real quick. All right, crude bounced, hit last week's lows. Now it's bouncing. Where did it hit to? Month to date VWAP. Okay. Don't know what's going to happen there. All right. There you go, folks. That was long-winded today, but I feel like the extra TA was much needed. Oh, thanks, man. Yeah, man. I was way more active with reels and stuff like that. I got to get back into doing that. I've had some great trades over the past couple of weeks. I've just been really concentrating on my execution and stuff like that. But thank you for chatting, and I hope you're subscribed. But thanks. I'm just trying to give you guys what I see. All right. All right. So hopefully, like Simple Life here, you can smash that like button, or Simple Life, share it with somebody if anybody needs help on the markets. I know my analysis later on gets advanced, but in the beginning, I feel like everybody could appreciate how I'm talking about the markets. All right. Of course, subscribe. All right. Thanks, my man. Subscribe. All right. Set an alert. I do this every morning around 8:10 a.m. All right. Give you the story of the markets, what the leaders and the laggards, the market news, the economic calendar. We go over daily charts. We go over that triple-headed monster, and we go over the ES and the Nasdaq futures analysis. And I just gave you the long and short trade scenarios. Okay, I just gave you those. We have a plan. All right. Now that plan could change. A lot of times it does because of what the market's presenting itself. Okay. So stay green if you can. Never, no trade's a trade. I got to tell myself all the time, no trade is a trade. Cash, just sitting in cash is a trade. Okay, if your setup doesn't come, it doesn't come. Now that's hard. That's not easy to follow that. Okay. So here's the markets we have, folks. Pretty nuts. All right. Now, everybody have a great Memorial Day. There's no trading on Monday. And we're back Tuesday. Okay. And if you're interested, I do have a Discord. Okay. Confluence Trading. Go to my YouTube homepage, join. I do update my thoughts on the markets, and you will get my real-time updates of what I'm seeing right off from the open. Okay, you'll see exactly what I'm seeing, meaning market internals. I give you screenshots of my market internals and say, this is what's going on. Now, I always can read the market. I'm going to get that straight. I'm never confused by the market because of my internals, because of all the structure that I talk about, my Vanker VWAPs. I am never like, what is going on with this market? Why is it moving? Never. Okay, but That doesn't always mean I can construct a trade where it's clear, because I like all things together, hence confluence trading. I like to go with the current of the market. I don't want to swim upstream. Okay? I want to go with whatever. If it's weak, I want to short. If it's strong, I want to find a place to go long. But sometimes it just doesn't line up, right? And lately, NASDAQ and ES have been disconnected a lot. We'll have to see. All right, everybody have a great weekend. If you want to see me, come join Discord. And that's it. And Simple Life, thank you for commenting. Not sure if you're new or, but thank you. All right, take it easy.